No surprise there.
All right, we are live.
So,
Um,
news hitting right now.
yeah, so we'll wait as we do just a few moments and let everyone join. But thank you all for jumping in and welcome to the final 2024 episode of Let's Talk Markets Live. We're going to do a year in review. I'm really excited that I was able to drag Alex into one of these. It's not his cup of tea, but the holidays are upon us. Christmas songs and mysterious unmanned drones fill the air. We've all earned a little time off. But before we wrap up the year, we want to take a quick look back at all we've achieved. So we dragged Urvin co-founder Alex Cohen into the studio for a special town hall edition of Let's Talk Markets Live. Welcome, Alex.
Thank you, Dave. Thank you, Dave. Yeah, it's been an eventful year, eventful past couple of months. Looks like there's news dropping right now from the Fed. What do we got going on?
There is. Yeah. All right. So we scheduled this. All right. So I've been corrected because I apparently didn't realize that we have one more one more Let's Talk Markets Live next week. Beginning of the week, I was looking at the holiday week. Kids are home from school. I'd already checked out, and it's only halfway through the week before. But anyway, we will be back next week. So ignore everything I just said. But yes, the Fed has cut rates. 25 basis points, no surprise there. Um, Markets, when I last checked, were selling off pretty hard, and I'll tell you why. Let's just take a quick look. Futures, ooh, that turned into a bloodbath. Yep. S&P right now down just a little bit. Nasdaq down 0.4%. That's quite a drop from where it was. So Nasdaq was trading around 22,305. Before the news hit, it's down to 22,232. The reason is that the median forecast shows in 2025 50 basis points of rate cuts. Before this, it was 100 basis points. So the median rate forecast at the end of 2025 is up to 3.9%. It was expected to be 3.4%. End of 2026 is expected to be 3.4%. It was 2.9%. So this is the Fed saying that we are concerned about inflation. Now I'm putting words in their mouth, but we're gonna find out a bit more as we get the press conference in a little bit. But this is the Fed saying we are concerned about inflation. I think that it is a bit sticky for our tastes, and we are not going to be as aggressive in lowering rates. So
It seems like the narrative going up to this was 25 basis point cut, right? This shouldn't be, I think, too unexpected to markets.
no, it's
Um,
not. I don't think it's the cut, the magnitude of the cut. I think it's the forecast for next year, which
mhm.
expected 4 cuts of 25 basis points next year, and now they're just saying 2. And markets were pretty jazzed about 4 cuts, as
All
was
right.
I, because in Canada, let me tell you, you can't get like really long-term mortgages here. Every 5 years, you get a new rate, generally speaking. Um,
So there's no 30-year fixed, 15-year fixed. It's all 5-year fixed,
yes,
but essentially that's
sometimes
just
you
an
can lock in
adjustable.
a 10-year, but not if you're an American moving to Canada.
Hmm.
So
Huh.
I need rates down in 2 years. So we'll see where we're at.
Yeah, yeah. All right. Well, we'll keep an eye on refinancing, or I guess just financing at that point. Brutal. All right. So let's talk markets.
Let's
2024.
talk
It's been a
markets.
year, right? Um,
It's
I'm
been like a
curious.
decade in a year.
Yeah, we've been at different sides of this. Like I've been watching, you've been participating. You've had a host of guests all along the way. It's been a lot of really interesting conversations between the regulars, on macro markets, and micro markets as well as some of the special guests and some of the storylines that I think we're developing. But like in retrospect, 2024, um, what were some of your favorite moments? What were some of, let's span the globe. If you're old enough to remember that from, old Sports Center. Yeah, what were some of your favorite moments from this past year and why?
It's been an interesting year. I mean, we've had some really great. I think I'm a little biased, but I think we've had some really great conversations on Let's Talk Markets. I think the two most popular, and I think my two most favorite, I would say John Welborn um, and Rob Shapiro. We got deep into market mechanics with John. We got deep into the history of Reg Show with both of them, into the loopholes. I think they were really eye opening for a lot of people. We got the best feedback on those two as well, and obviously the by far the highest viewership on them. I really enjoyed those. I enjoyed many crypto conversations. I mean, that's personally, I'm very interested in crypto. We talked with Lee Schneider from Avalanche, we talked with Justin Slaughter from Paradigm, and we talked with Chris Giancarlo, who is, rumored to be the crypto czar in the Trump administration. So, I think it was great. Like those were, conversations with people in crypto, but from different perspectives, some of whom want regulation and want clarity, and some of, whom believe the government doesn't really have a role to play. Chris, his views on a central bank digital currency, a CBDC, were fascinating from a completely different perspective. A lot of people criticize CBDCs for being an instrument of government control. And Chris saw it as a way to sort of take economic liberty and freedom embodied by the United States and export that to combat, totalitarian attempts at CBDCs. So, that was a totally different perspective on the issue than I think most people had heard. And then, of course, our regulars, um, who are just awesome, wonderful people that I love having on here every month or two. And that's, on the macro market side, we've got Claudia Sam, Ophir Gottlieb, and Kyla Scanlon. And then on the micro markets side, when looking at specific market moves and making recommendations, we have Dennis Dick, George Kailas, and Eric Smolinski. So those have all been, again, just illuminating, fascinating conversations.
Yeah, there's been quite a vibe shift in crypto over the arc of the year. I'm curious, in your
Yeah,
conversations from beginning to end, what has your thumb on the pulse kind of been relative to perspectives of those individuals and others? We're in a completely different place now than we were in January.
completely. Yeah, absolutely. And that's like an understatement, right? um, I think in the world of crypto is obviously thrilled and excited right now. I mean, Bitcoin trading at around 105,000. And here, that was going into this. Let's see if the Fed announcement had any impact on it. Actually dropped. So Bitcoin dropped down to 103,000. So, dropped by about 1%. Um, but I think Bitcoin has been a fascinating case study since the election, and it has not been all of crypto. Now, generally, if you look at Ethereum, it's up. Avalanche is up quite a bit. Solana is up quite a bit. The big coins are up, but nothing like Bitcoin, which is just the grandfather of everything, right? And so, one of the questions that I have going into next year is the U.S. really going to establish a strategic reserve for Bitcoin? Um, I would say yes. I think that is shocking, but it actually seems more likely than not to me right now.
So I've you know I've heard that the U.S. essentially already has a de facto Bitcoin reserve by virtue of its
Like,
forfeitures and seizures, right?
right,
It has
right,
somewhere
yeah,
near 300,000 Bitcoin in its possession.
right.
Now, whether it expands that, whether changes the where that sits and lies, or whether that's just held up as being the strategic reserve? Is it going to be, is Congress going to allocate funds for that purpose? All of those, but there's already, the US is already in, US government, I'm sorry, is already in possession of a significant amount of Bitcoin, which could form either the foundation of an additional reserve or just comprise the reserve as opposed to selling it into market and using it as agency funds. Interesting. Why do you think Bitcoin in particular has been detached from the rest of the resurgence and then insurgence, right, of the crypto market? What is it? Is it the articulation of the reserve that you think? Is it the optimism around US kind of creating price stability at an elevated level, the government? Like, what do you think has driven, what is it, like up 50, up almost 80% since the election? I think it was at 60, right around 60 right before, and now 104, as you say.
So yeah,
Um,
let's see. November 3rd, yeah, it was trading at 68, 69, 69 right at the end of October to 103 and a half today. That's, I mean, more than that's what, that's a 50% increase. Massive, right? Just massive. And I think it's obviously there are many factors as to why Bitcoin and why the others have lagged so significantly. But frankly, I think the ETFs have made a huge difference, just a massive difference. And the crazy thing that someone posted yesterday, um, let me where is it? I had that. Is that the assets under management in Bitcoin securities now has, and that includes like it includes it's basically like the assets under Bitcoin ETFs of any sort have surpassed the assets in gold ETFs.
hmm,
So there's now, and it's the image is crazy. If you look at the chart, you see like this long, steady march of gold ETF AUM, and then at the very end, you see Bitcoin go like that, with no end in sight. And
it,
so I
it,
think I think that pressure is massive. That between that and frankly, like what Michael Saylor has been doing with MicroStrategy, like just buying Bitcoin hand over fist.
mhm,
This has been like the emergence of the Bitcoin maximalist, as well as the accessibility to the
right.
everyday investor.
Yeah, I think that accessibility part, that's what I was going to ask you about, right? As you kind of draw the divergence between those two curves, you could just draw a straight line with access and, participation by retail, by the public. And then, as you're saying, you have these institutional ETFs, which then, further support the purchasing trends. Um, do you think other cryptocurrencies, other digitized commodities? Is that a thing? Do you think those trends will pick up in the future to kind of reflect the exuberance of Bitcoin or try to mirror or capture some of that? What trends do you think you could see emerging based upon the success that Bitcoin has had, where essentially it's just this um, very um just energetic commodity at the end of the day.
Yeah, it's I mean historically, this has been the way every crypto rally has progressed. It's been Bitcoin rallies. Following that, Ethereum tends to rally. So very much like this lead lag relationship. And then following Ethereum's rally, the rest of the crypto, industry comes along. And that's honestly like every single time that's what happened. And by the way, I'm just checking here, and markets have really continued to fall. Nasdaq's now down 1%, where I believe it was up on the day. So it's gone down just about 100 points, almost
Mhm.
100 points. Big drop to that Fed announcement. So
Hmm.
it is, I think, a question. Will that trend repeat itself this time? Or are we in sort of this new regime where Bitcoin is so accessible and the rest are not really as accessible? Um, and what does that mean? Um, I know there have been there are applications right now for um, different ETFs. There are some Ethereum ETFs. There's supposedly at least an application in for a Solana ETF. It's very possible that you start to see those ETFs drive more volume into those coins, but I don't think it's a given. I only think it's
Yeah,
a possibility.
I wonder if, I guess, to the extent regulatory clarity exists in the crypto world, it's strongest in a lot of senses, or been most spoken about in a lot of senses around Bitcoin, right? And people have weighed in, so there's clarity. There's a reason why institutions are comfortable wading into that environment because of the kind of those expressions of classification and treatment. I wonder if with this new administration essentially coming in with a mandate to provide clarity around crypto, if once that clarity is imposed, if the lagging um, coins and what have you will catch up because of the clarity. I wonder if it's a clarity
Could
issue.
be, yeah, yeah, it absolutely could be. It's clear that Bitcoin is not considered a security. It's mostly clear that Ethereum is not considered a security. There are obviously several technologies or coins that mirror Ethereum enough that they would probably fall under that. So who's going to get over, responsibility for oversight and surveillance and that kind of thing? Is it, it's probably going to be the CFTC for many of these, but I do think you're going to have, you have Paul Atkins coming in as a very pro crypto SEC chair. At the same time, I I think that despite the vitriol aimed at Gary Gensler, that part of his legacy will persist, which is enforcement against significant fraud. And I think that the one thing that I don't see in crypto, which we absolutely need, is who is the cop on the beat. And I think that when Gensler came in and he saw that there was really no cop on the beat, and that was really problematic. Now, his approach was heavy handed and probably unnecessarily so. But it was also partially a reaction to the fact that there had been almost no protection for investors and consumers. And so I would be surprised if the SEC just stopped going after crypto frauds. I think they'll be more targeted, they'll be more selective, and they'll probably try and go after the bigger, more important ones rather than like the low hanging fruit, which is a lot of what the SEC did, which it was rightly criticized for. Like, why are you going after Kim Kardashian when, like, Voyager and others are just costing people huge amounts of money and life savings? Like, that's the problem,
Well,
and
it's the same reason they went after Martha Stewart.
right,
So
right, that's right. Yeah.
so yeah, I think with that in mind, don't you think it would be useful to actually issue some proactive guidance and parameters? Right, that was the biggest criticism I think from the crypto community to Gary, is that it's regulation by enforcement, as opposed to engagement and forward-looking guidance as to these are the characteristics that we would be looking for to classify this Ethereum project as an security, whereas Ethereum as a chain itself is a commodity, right? It's the building upon it of a project that relies
Right.
upon the efforts of others for profit. That differentiation, that line, that clarity, and regardless of what it is, just the issuance of it, the guidance, right? Then it allows people to navigate and
And
find
to
that side of the
register,
line.
right? Like
Yeah.
the SEC should offer a path to registration, and it should be there needs to be something that is focused on the needs of crypto firms and allows them to be brought into the fold. And so the problem with both of these ideas, like the guidance and the path to registration, is that it still likely requires something from Congress, and I think that's been a big part of the problem this entire time. And now, if you're the SEC and you're a far more hands-off SEC, are you going to issue that kind of guidance? Are you just going to provide a safe harbor, which is what Commissioner Peirce wants to do? Eh, I don't, I don't know.
Right.
I'm
Right.
hopeful maybe we will be able to talk to people at the SEC, senior people at the SEC, maybe even on this program next month. We'll see, who can
Hint,
provide
hint.
some insight, yeah, into their thought process and what 2025 might look like. Because I do think like 2025 is going to be a really transformational year from the perspective of crypto and financial regulation. And I it's not quite clear what direction it's going to head and what form it's going to take, but you can be sure that it's going to be heavily influenced by the crypto lobby, and it's going to, you know, be received by a receptive audience, both from a regulatory and legislative perspective. You have Congress and you have financial regulators that are now going to be far more receptive to what the crypto industry is saying versus what someone like Elizabeth Warren is saying.
So, segue. You mentioned more accommodative or more for crypto and regulatory reform in some ways. Let's talk about what we've done over this past year for reform efforts. We've done a lot. We've tried to mix it up a little bit with the powers that be and continue to advance
Yeah,
the
why don't
causes.
you
Uh,
take
uh,
take take a first shot at this, Alex?
Yeah, sure. Well, it's, starting points. So no, we've done a lot this year, as most of you folks will know. Urvin, our advocacy arm, we the investors, which has really taken up the mantle of investor protection, transparency, fairness, and equity in the markets, both at a structural and also from a participation perspective. We the investors, over the past few years has been engaging both up on the Hill and with the SEC. We've been in the conversation and in the fight in a very visible and active way. And, we've had close to 15,000 comment letters submitted to the SEC related to four rule proposals that the SEC, market structure proposals that they put out last, I think it was December. Um, and all of that led to impact, right? They took those in, considered them, and just at the end of this year, they released Reg NMS final rule, which adopted some of the measures that we, the investors, was advocating for,
Hmm.
but failed to adopt or, in some instances, even address with substance some of the other issues that we, the investors, had advocated for in our voluminous comment letters. So as a result of that, we surveyed the field and tried to think about how we can best both protect the progress that we've made and also advance um, individual investor interests forward after the issuance of the final rule. So, as many of you may know, we the investors, in efforts with Urban Finance, submitted a petition for review. We sued the SEC in October, basically seeking additional reforms that they had not put forth that related to the comment letters that we had submitted, as well as securing venue in the DC Court of Appeals. um, Dave, do you want to talk to a little bit of the substance of our discontent? And maybe I'll talk to some of the strategy around our discontent and some of the things we've done and what we're going to do next.
Sure. I think that when you look at the rule that was ultimately adopted by the SEC to change Reg NMS, um, it was let's say if what we wanted was a 10, I would call it a 5. So uh, it addressed some really important problems. It did not address the fundamental problem in markets, which is the dominance of very few firms in the off exchange space and the growth of off exchange trading. It's something that everyone who is part of We the Investors wants to change and cares about and talks about. It was something that we talked about in pretty much every single comment letter that we filed and that was filed. And it was something that Gary Gensler talked about when he first got into office. He identified the problems in markets that we saw. We agreed on those problems. The initial rule proposal quantified the damage that was being caused by these practices. It dramatically underestimated that number, but it still quantified $1 billion damage annually. We clarified in our comment letters that it's more like $10 billion a year. So, just off by a little, just a few billion. What's a few billion here or there between friends, right? But um, it was it was really disappointing to see some important changes to quoting increments, access fees, market data. The SEC made some very important improvements and changes there, but just failed to fix the fundamental problem in markets and failed to even talk about why they didn't, right? That was it was very frustrating and clearly showed the continuing influence of the market makers on the process, the continuing influence of special interest groups, and how retail investors really don't have the outside of what we have done. They don't have we still don't have the influence. We have the seat at the table, and I was excited to have that and to have made a difference in the final form of the rule, but not enough to combat what the PFOF brokers and the so-called market makers, the internalizers, the influence that they had. So, I think that when we looked at it, at first we said this rule does not go close to far enough to addressing the problems that the SEC itself identified and quantified, and that we've been pushing for to address for a long time.
Yeah, and I think with that perspective, a 5 out of 10, it brings some of the reform, right? It reduced the access fee cap from 30 mils to 10 mils, a
Right.
two-thirds reduction in so whatever sort of revenue streams are being derived and then leveraged for, inducements and incentives, that revenue stream has been cut by two-thirds. So there's, progress in some ways consistent with what we had been seeking, and in other ways, kind of been kept at arm's length. Um, we filed suit in October, really with the two goals of trying to pursue additional reforms when there's a changeover in administration. Our confidence level in a reissuance of a stronger rule dropped, and so priority became preserving the progress, right? Banking the progress that we've made.
Yeah, and I think
And
let's just really quickly let's clarify that, right? Our strategy when you sue the regulator on a rule, you're trying to get the court to tell the regulator this rule does not satisfy the requirements of the Administrative Procedures Act. You have to go back and fix it, right? That's the goal with a lawsuit, and that was our goal. But
and that's why who matters on the other side
that's
who's
why
going
it
to fix
matters
it.
who's
Yeah.
running the SEC. And
Yeah.
as long as you had an SEC being run by someone who is reform minded and willing to potentially uh, strengthen the rule, it was it was a worthwhile strategy. As
Yeah.
soon as that changed, we had to adapt.
What excites me is obviously there's the substance of the discontent, but then there's the procedure and the strategy. And one things that we the investors identified very early on was how the DC circuit, which is where we filed, in a lot of respects is superior to every other circuit. If you've noticed, lots of the other circuit courts, the Fifth Circuit in particular, has been just routinely striking down
Yeah,
various SEC rules, and those rules have different merit. Like some of them perhaps should stand, some of them shouldn't. But irrespective, it was somewhat of ordinary course at this point. If something's raised in the Fifth Circuit, for instance, it's a regulatory rule in a post Chevron, in a post Supreme Court Chevron deference striking down, it's a whole thing world. Um, by filing in DC, we've secured a venue for the matter that's most likely to uphold the existing Reg NMS reforms that we fought for. Now, by withdrawing, we're going to participate as amicus parties, basically friends of the court,
Mhm.
where we raise all of these issues that we have without actually risking the progress that we've made and securing that win in terms of the actual venue. So I think it's been 2 months. We filed in October. We navigated, and we made some moves. Now, next up comes an amicus brief. I think in February, depending on when the various parties file. But when we do post our amicus brief online, it'll be available for all of you to see. We're excited about doing that and continuing, I think, this effort forward. And one of the things that I think it really underscores for we the investors and you all is the legitimacy of the effort, right? This
Mhm.
isn't an effort that exists outside of where the power structures are operating, that's trying to just move things through shaking a fist and shouting. We're existing within those power structures, influencing those power structures. And I think it's going to be very interesting as Dave foreshadowed, next month we have interesting guest coming on, a great guest coming on. And after that, we're making inroads to make new relationships, right? In the previous administration, we met with the SEC and Gary Gensler and folks up on the Hill. Well, we have a new administration. We, the investors, was never and is not a partisan organization. We're an issue-driven organization, and those issues demand the ability to be able to navigate whatever environment it's in. And frankly, there's a lot of opportunity here for us. So we're excited about what these potential next 4 years will bring, both for our causes as we can immediately identify impacts, as well as the unforeseen effects of what deregulation in some spheres might actually result in. So
Yeah.
should be pretty interesting.
I agree. And I love I hear this constantly when we talk about this from you or the people who are listening and supporting us. It's not red versus blue, it's us versus them. And I like that very much and I agree with it. And it doesn't really it shouldn't matter who's got what branch of the government to get fair rules in place and an even playing field and a competitive open market. Those are issues that everyone should be able to agree to, um, you know, unless you take a lot of money from market makers.
Yeah, no, it's really like my background as a lawyer, like I had a lot of exposure into the healthcare industry, and regardless of my political leanings, I'll be the first person to raise my hand and say there's a lot that needs to be changed with the healthcare industry. Dave, everyone knows his backstory. He's been involved in finance, like advocacy for, he used to say a decade, but now it's been 4 years. So it's got to be
Yeah,
like
too much
14,
gray hair. Yeah,
too many gray hair. But like he'll be the first person to raise his hand. So it seems like across, and I know people in immigration, across the board, when you peel back experts within issues, universally there's room for improvement. So I think what's exciting in one respect about this next 4 years is it's another swing at improvement. It's another swing at efforts and issues that we can hopefully catalyze reform for. We're already a very significant, I think, size and representation. There's almost 100,000 plus. It's going to be interesting to see how over these next few years we can increase our influence and presence and voice in these rooms, to make sure that that North Star of whatever efforts are undertaken, whether it's regulation or deregulation, either way, the intent should be the same. Especially when, the SEC or whatever organization has a mandate. Let's stick to that mandate. Let's advance that investor protection. And that's what we're here for. So that's we the investors. What else we got going on, Dave?
well, we've talked past and we've talked present, so and we've started to talk future. So why don't we get into the future? We've got a lot in store for the new year on Let's Talk Markets. and we're going to be adding, I think, some interesting depth to what we do here. So we're going to start looking at different people in markets, different firms, and their journeys. And we're sort of fortunate to be tapped into um, a very a very diverse group that we can that is excited to participate in something like that, and that will come on here continuously to both tell us about what they're doing and tell us about how it's going. So next week, you want to start with that, Alex?
Yeah, sure. To put a finer point on what Dave is, on ramping us to is as you all have seen, we've had conversations last week. It was with Silicon Prairie, and they have ambitions to start an SRO that competes with FINRA, and where it's a member driven, much more, I think, open, transparent, and we want to follow their journey and their ambition and bring you updates on what that process looks like from someone on that respective insider path, and what are the challenges, what are the reception. And I think not only is that informative, but it's also an opportunity to engage. Silicon Prairie, for instance, in its SRO journey, is going to have bumps and bruises, and there might be things that align with Urban, we the investors, you all individually, that resonate. Similarly, we've had on GIX, the Green Impact Exchange.
Yeah.
They're coming to market as a brand new exchange, right? We have the opportunity to follow GIX coming to market, hearing their stories, hearing their tribulations as they come to market over the next couple of quarters. We're also following and engaging with a company called XCF Capital. They're a sustainable aviation fuel company. They're going from SPAC to publicly traded company next year. So we're going to follow the journey. And by follow the journey, it's not just us talking about it. We're going to be bringing on the CEOs or the primary actors on a repeat basis, on a series basis. So you all can learn from their perspectives what it's like to try to convert EBITDA positive, an actual operating SPAC, into a publicly traded company. What is the before? What is the during, right? When he's ringing that bell for the first time. And what is the after? Same thing for all of these. So right now we have an exchange, a company, and a potential birth of a new SRO. And these are narratives, these are stories. We want to help provide more of that human side of it. Like, what is it like to create an exchange? Dave
Right.
knows, he was there for IEX, but we don't know because we weren't. But if Dave was essentially live streaming it or live blogging it, we would all have a much better appreciation for it. So I think that's a series, and that's a direction that is going to complement a lot of the other things that we were and will continue to do, like macro markets and micro markets, and other one-off really interesting interviews. But we think that that series of three different coming to market, spoken by individuals living in that experience in that moment, and humanizing what it is, really should be, I think, both unique and very informative.
Yeah. Yep. That's it. So I think it's going to be a fun 2025 for Let's Talk Markets. It's going to be an exciting 2025 for Urvin as we continue on our mission and our journey to connect individual investors to the companies they invest in and to reform markets in the interests of individual investors. And it's going to be a fascinating year in regulation and politics. And, we're just here for the ride, right?
Yeah, I love it. The journey is the adventure. Absolutely,
Yeah,
it's the friends
that's
you
right.
made along the way.
That's right.
Um,
Exactly.
yeah. Any closing thoughts? Any closing words? Anything you're most looking forward to in 2025?
Well, what am I most looking forward to in 2025? Boy. Um,
Bitcoin 1 million? No.
yeah, Yeah, there you go. Yeah, that's
Bitcoin
right.
1 million. There you
That's
go.
right.
Hey, you never know.
Scott said Pirates win the World Series. Oh, my friend, I'm so sorry that you are a Pittsburgh fan.
All right.
You
Well,
know what? Yeah, I will piggyback on what Scott just said. I am looking forward to the Eagles winning the Super Bowl in 2025. Hell yeah, best
uh,
team in football. Ah, I feel so good. Eagles Bills for the Super Bowl. Josh Allen on his butt for the game. This nasty pass rush and this amazing secondary. Eagles defense, best in football. Book it right now. You heard it here.
all right. On that note, um,
Yeah,
awesome.
Dave says the Bills love losing Super Bowls. Exactly. All right. On that note, thank you everyone for joining this year in review, for spending some time with us on this beautiful Wednesday afternoon. We will see you on Monday. Make sure if you're on YouTube, hit that like and subscribe button for us. If you're on Twitter, hey, jump over to YouTube and go follow us. That'd be great. And thanks again. Thanks for joining us, Alex. Always fun to have you on the program.
Always a pleasure. All right.
All right. Bye, everyone.